Hi guys, my favorite day of the week, and especially when I get to talk about this topic and show you what reality is happening. Because what we're seeing happen right now is the US's derivative gold contracts, of which they can create an unlimited amount, is meeting with a big whale that is actually taking delivery. And that is creating challenges, not just in New York, not just in London, but all around the world. So let's just dive right in, and then we'll do Q&A afterwards. But I'm so glad this is something I've been waiting for a very long time. And we know our good friend JP Morgan. Oh my goodness, 4 billion gold delivery in U.S. amid tariff fears, but even forget that last part. $4 billion gold delivery in the U.S. But traders, interestingly enough, traders plan on delivery over $8 billion. So there are the other bullion banks that have to pull upon physical reserves, and we're going to talk about where they're getting them from shortly. But this is the second largest gold delivery notices since at least 1994. Probably earlier than that. This is a very big deal because that derivative market in the U.S. has exploded. And in New York, it's primarily the digital market. In London, it's primarily the physical market. But CME gold stocks rose by 70% over 2 months. So this is not something that just happens on a whim. They have been preparing for this, but they better not have too many demand for deliveries or there's going to be a problem, because these are the markets in the US, right? The exchanges, which are just those spot contracts, the gold ETFs, which you and I, if we buy into that, which I don't ever recommend, but if we buy into that ETF market, all you have is a contract. You don't have the right to get the underlying gold or silver if it's a silver contract. And then, of course, the OTC markets. So last week, the June contracts for physical gold on the COMEX traded at a premium up to $60 per troy ounce over the London price. Do you see that dislocation? And so when we look at that demand for the physical, there is a finite amount of it. And then the premiums grow as demand escalates. So up to $60, and that's creating what's called an arbitrage circumstance. So you can buy the gold in London for $60 left. Then you have to ship it over to the US for delivery. Normally, you don't have to do that. Normally, it's just all paper contracts, and so it doesn't put the system in jeopardy. But we've been watching the central banks buy all of that gold. That's not coming back on the market. And we've seen individuals loading up on gold and silver, and that's not coming back on the market. Total gold flows into the U.S. could be far higher than the COMEX numbers reflect, according to market participants, because there are likely to have been additional shipments to private vaults in New York owned by HSBC and JP Morgan and others. So again, keeping things hidden from you. But what have I been saying? Stop waiting. Stop waiting. Because you might not be able to get delivery. And I can tell you for an absolute fact that there are things that I was able to get back in 2002 when I saw that the dollar market was cracking. That's really what drove me to the gold market. But we're at the end of this, and there's a lot that's going on, and there are some other things that I see that they're starting to talk about to try and prolong this. But the reality is if it's a contract, there's an unlimited amount of gold and silver that they can create. And when you're talking about the physical markets, whatever that form is, there's a finite amount of it. So build your physical portfolio, your sound money strategy, which you can just click that link and have a conversation with one of our sound money strategy specialists to make sure that you are covered, even with the paper and intangible assets that you might hold. It's a whole strategy, but you can give us a call and find that out. Traders load U.S. bound planes with gold and silver, and they keep going back to the tariff bets, and we certainly know what's going on with that. Mexico and Canada have been postponed for another month. The tariff went into effect, 10% tariff in China, and so they've retaliated with a 15% tariff on certain items. But this is just the beginning of the trade wars. It is time to get to safety if you haven't yet. And that's what you really see happening, because a rising gold price is not just an indication of a failing currency. It's also an indication of an imminent crisis. Physical gold and silver are the ultimate safe haven assets. You hold it, they run no counterparty risk, and they're sound money. So they load up. New York spread has made air freight profitable for silver. Usually they would just send the silver over on a boat, but not now, because the premium is so huge. Remember, I said I do believe that we will see silver conclude its cup. You know, it could have been last year. It is likely to be this year. That's at that $50, but that's still not reflective of its true price. The reason why I chose this graphic, though, is on oil, because oil goes into still everything that we do. And so this is an indication of inflation ahead. Make no mistake about it. So New York-London spread has made air freight profitable for silver and gold, silver and copper flowing into U.S. to capture the premium. There's somebody that's wanting delivery, though. That's the piece, because usually these are just paper contracts and the gold and silver don't go anywhere. They just stay in the vaults. So this is a huge shift. And it should be a wake-up call to anybody that's paying attention at all. So look at the gold and silver stocks that are surging in New York. This is your physical silver. You can see, what in the world just happened? That was weird. Sorry about that. That's what happens when you go live. But there's your physical silver, and you can see how much they've put into the system over the last couple of months. And there's your physical gold. Much, much higher, because there is some huge whale that is asking for physical delivery. This is a big problem. It could end up cracking the entire market. And because of the demand for the physical, look at the premiums, look at those spreads. For silver, you can see how much that's shot up. And I might point out much higher than we've seen it in a very long time, but that didn't just start. Okay? And here's the physical premium on gold. Again, same kind of thing. So with the paper contracts, they can make as much as they want. But in the physical world, there is a finite amount, and central banks have been pulling it off the market at the highest level since they ever started tracking gold and central banks. So my question to you is, will you heed this warning? Because what we are watching unfold is gold fever, and there is no fever like gold fever. None. Spot prices shot to record highs this week, but the additional premium on COMEX has created a lucrative arbitrage opportunity for the handful of banks that can quickly fly bullion between key trading hubs. So that means that they're buying it in London for $60 premium less and flying that over to New York, which means that physical, it isn't in the London market anymore if it's moved to U.S. And if delivery is taken, in other words, that gold is coming out of the market, I'm not so sure how quickly that will go back on. We're going to talk more about that in a second. but silver as well. Similar pricing dynamics have emerged in other COMEX contracts too, and the disparity has become so large that traders have started flying silver into the country. The precious metal is usually too cheap and bulky to justify the cost of air freight. And one industry veteran says it's the first time they've seen it happen. So I know how frustrating it can be for people that, you buy your gold and your silver and it doesn't do anything, especially for silver stackers. And you're looking at the spot market thinking that that's surely got to tell you the true value of these things. And it doesn't. It reflects a trading market. And that trading market is drying up right now. And I mean, this is really significant because there's a lot of physical gold that's being held at the Bank of England. This is not the gold for the UK or the British Isles. This is gold that the Bank of England is holding for other central banks. London bullion market players are racing to borrow gold from central banks which store bullion in London. Wait a minute. Let's think about that for a minute. So they are borrowing bullion, they're borrowing the physical from the Bank of England, who is holding gold for global central banks, which means that the central banks are still showing that they have that gold on their books. But now that gold is being moved to New York, and somebody is taking physical delivery of it. And so it's not even in the central banks anymore. And that's still being hidden. And it still makes it look like there's twice as much gold as there really is. Can you see this manipulation? At the end of the day, I can't give you a lot of guarantees, but I can absolutely 100% guarantee this. At some point, all assets, all instruments move and go to their fundamental value. And they go from undervaluation to fair valuation to overvaluation to fair valuation to undervaluation constantly. So what's happening is we're coming out of this loop. We aren't even marginally near fundamental value yet. And you won't really see that until the governments need to get confidence in the public back. But as we've been witnessing in Zimbabwe, once confidence is gone, this is not an easy feat. And the inflation that we have coming up this year, is this going to be the year when the rest of the confidence is lost? I don't know, but we're going to pay attention. Now, typically, the minimum waiting time to load gold out of the Bank of England, which stores gold for central banks, has reached 4 weeks. In normal times, the release time is a few days or a week. 4 weeks. That's how big that demand is. And they've been moving this for the last couple of weeks. This story is not even marginally over yet. We're going to be paying a lot of attention to it. It's significant because the Bank of England has one of the world's largest gold vaults, but they are the second largest custodian of gold in the world after the New York Federal Reserve. And you can't go in and see. I guess you can go in and actually hold a gold brick there. You can't do anything at the Federal Reserve. But Asia has also seen some knock-on effects, particularly in markets like Singapore and Hong Kong. So it's not just London and New York, but this rush to the physical is impacting the global markets, and we have not yet seen the full results of that. But I will tell you that there's no doubt in my mind, even in the manipulated markets, the spot markets, gold will go much higher, but do not be blinded by numbers. Please, people get blinded by numbers. This is what they knew when they set the system in place. So, hey, you see things going up, and then there's a fear. So, gold is the primary currency metal. We have to suppress it, but now it's becoming much more challenging to do. They'll have to create a whole lot more contracts, and we'll see what that looks like. Because the total above ground stock, this is the most current data that I could find, of the end of 2023 was 212.582 tons. That's it. It's just this big cube and of gold. And so this is a human being, right? It's not really that much bigger. Fits into Olympic-sized swimming pool. And what are the primary uses? Though gold is used in every single sector of the global economy. So what I'm going to show you is not a conclusive list. It's just a partial list. But jewelry, right? And have I not said gold and silver in any form is monetary at its base, right? Bars and coins, including ETFs, even though you can't access the gold in that. Central banks, other, whatever other is, there's other over there. All above ground gold fits into a 22 meter by 22 meter cube or a 73 foot by 73 foot cube. That's it. That's it. There's a finite amount. Doesn't matter what the form is. Doesn't matter when it was pulled out of the ground. Gold is indestructible. And so we can account for about 98% of all of the gold that has ever been mined. Additionally, in this form, and we're going to talk more about this in a second, but in the pre-33 collectible form, that is at most 2% of that market. So just a little itty bitty space right there. That's it. There is a finite amount. This matters. And we've already hit peak gold because proven reserves are only 59,000 tons left, which is far less than the 212 tons that have been pulled out of the ground. So there's less in the ground than there is above ground. Do you see my point there? And Adam's nodding, so maybe so. But if you have any questions, this is why I like doing this live, because jot down your questions and let's talk about it. There is a finite amount yet available to mine. Whereas with the contracts and the derivative contracts on gold, infinite amount. Derivative contracts on silver, infinite amount. Don't believe them. Don't believe the numbers. Here again, the uses of gold and silver. I'm hammering this home because this is your bazooka in this currency life cycle fight. Gold and silver have proven that they will live to fight another day. But even beyond that, we need to talk about energy because I know that a lot of people want to think that Bitcoin is digital gold. And it mimics some, perhaps, of that, but it has not yet been tested. Whereas physical gold and silver, it takes energy and effort to mine that and pull it out of the ground. Then we talked about this before. I'm sorry for being redundant. It's just so important that you get this point, right? So it takes time and energy to pull this gold and silver out of the ground. So then this energy is stored inside of the physical metal and then used in all different and every single sector of the global economy, releasing that energy that's held in there into these different sectors. I hope that makes sense. It's kind of hard to explain it, but if I can reuse this, that means that energy can be used in other places. And guess what? Gold is indestructible. So no matter how many times you melt it down and use it someplace else, it holds that energy for use in those different sectors. It has the broadest base of demand, the broadest base of functionality. That's what you need. That's why it is the primary safe haven asset. And that's also why it is above all governments, it above all central bankers. You need to become your own central bank. You need to have a solid foundation and sound money, because that's what's going to maintain your freedom and your choices. And we are in a battle royale for not just our lives. I mean, heck, I'm 70 years old. I'm going to be here just however much longer I'm going to be here. This battle for us is for our children, for our grandchildren, for those children that are not yet born. We need to do this. We need to come together in global community. And we need to have a peaceful revolution just by converting your garbage government fiat money into sound money, gold and silver, and holding it yourself. So I said I would talk more about this market. So let's do that, because this first chart is on key dates and ultra rarities. And a lot of the coins in this arena would be $1 million, $15 million. This is the only area that the elites, I can't afford $15 million on a coin, on 1 ounce of gold, but there are many people in that 1% that write the laws and write the rules that actually do hold gold up in that area. And I want you to think about this for a minute, because what gold is movable wealth. I can take this coin and put it in my pocket and go anywhere in the world with it. And that was not a problem for me. And I've done it every time I travel overseas, whether it's Australia or France or wherever it is that I'm going. And I'm going to do it again when I go to Malaysia and when I go to Germany toward the end of this year. And I have no problem moving this. So maybe this is worth $4,000 currently, $4,000. Maybe it's worth $15 million. Small package, a lot of wealth, global demand, global market. But what I want to point out to you in these ultra rarities is that we've had breakouts, and that typically breaks out first. And somebody asked me what the time frame was between the breakout of the ultra rarities to the area that we work with at Zang Enterprises, which is certainly not $15 million coins. We might be able to get them if anybody really wants one. But I don't know. We haven't tried that yet. But you can see this breakout, and this breakout continues, and it's escalating because the smart money, those that can create the laws and write the laws, and they typically do it for their benefit, making all-time highs. The lower area, and I did, did you bury the 2 pieces of paper that I put over here that had the numbers on it? Sorry about this. Is that them? Yes, that's what I wanted. Thank you so much. Okay. And then we have the lower arena, which is more like this coin, right? And it might be these days $4,000 or something like that. I don't really know because I don't really work in it, but I had our CFO pull some current data because we're watching the spot price. And if you have a higher population coin and a lower quality coin, those typically move with spot up or down. The higher level coins do not. So we're seeing more of an adjustment in pricing to this lower level coin than we are in the upper level coins, which haven't really moved yet. That is an opportunity and a very good thing, though they're a whole lot cheaper. And I want to point out that they're in the same classification. Next week, I will have my piece done on confiscation, because a lot of people have hopium. Oh, well, they're not going to confiscate again. We're going to talk about that, but I don't want to get ahead of myself. So where are we in this lower level? Well, we've had one breakout, but we're still not. We're getting close to the 2008 highs, but we're not there yet. So when you look at gold and you look at, you look at gold and you look at silver, and if you can understand that the prices that you see, the spot prices, are absolutely manipulated because they can create as much gold and silver that does not nor ever will exist. But you see that there's a finite amount of it. And my goodness, a lot of that is going into hands, strong hands, that are not going to be liquidating it, creating even more demands, because this year, markets like consistency, and they like to know what's going on. That's not what we're getting this year. We're getting a lot of things that keep the markets off balance. And what that means to you is that in these markets, the most likely outcome is a lot of volatility, which I think you've already seen, but also a greater flight to safety. So you have to choose where you're going to go. And to be perfectly honest with you, people that really don't understand history, people that really don't understand currency life cycles and how that works, please tell me how you can make an educated choice that puts your best interest first through assumptions and not hard data and historic facts. I personally, I'm not wearing that bracelet. Okay, this is the bullion that I own. That's it. Why? Because I believe that we are more than likely to see an overt confiscation on a global basis. And we're actually already seeing a lot of that, which you'll see next week. So you don't want to miss the live next week, because we are going to talk about it. So any questions that come up for you, please, please, please write them down so that we talk about it next time. And you, of course, you don't have to be nice. You can be as direct as you want. And if you disagree with me, rock and roll hoochie coo. But let's look at the facts so that we can make educated choices that puts your best interest first. Because this is less than 2% of the total gold market, of which is just a cube, 72 feet by 72 feet. And the global central bankers have bought an awful lot of it. And I'm just wondering if they need it and somebody has taken delivery of it, it's not coming back on the market again. Can you see this huge explosion? And I hate to say that, can you see this huge explosion coming in the price? Because I don't give a crap about this stuff. I don't care about it at all. I'm telling you right now, I think differently about fiat money than anybody else that I know, because they can create as much of this garbage as they want to. And that is the design, to inflate your wealth away. But in the gold and the physical silver market, there's a finite amount. In the paper market, there's an infinite amount. And let me show you what that looks like, because this is the spot gold contract, right? And I did this on the 31st, and you can see, bam, we have a breakout. Now, I do want to point out to you that there is a little gap here. And as you've heard me say many, many times, at some point, all gaps will get filled. So if we see a little pullback in the price of the spot price of gold, it's just doing its technical job. That's all it's doing. Utilize all of this information to get your position built as quickly as possible. Because if this is the beginning of the end, and that collision course between gold contracts and physical gold, as well as silver contracts and physical silver, if this is the end game, and it could be, because delivery like that is not normal. So there is something major, pattern shift, that is happening. And we're going to find out what that is. But I believe that it is because we are at the end of this currency's life cycle. Period. End of discussion. I don't care what they do to the digital markets. whether it's the stock market, the bond market, the crypto markets, or even the real estate market, which isn't all digital. It kind of straddles both, but that too has been just turned into a product. It's about keeping you inside of the system to make it easy to transfer your wealth, to make it easy to transition into that new system. And here in the digital world, well, look at this is volume, right? That's the trade volume. They can create as much digital gold as the market demands. That's it. But does it really, at the end of the day, reflect the fundamental value? No. It just reflects the trading value based on that supply and demand of those contracts. Easy peasy, cheap to create. And so I really do think that this could very well be the start of the breakdown in the fiat metals markets. You better get your position built. You do whatever you want. I can't tell you what to do, but this needs to have created a lot of urgency in you because this is a big deal. So you make sure that you call and you set up a time to speak with our sound money strategy specialist and get your sound money strategy in place. Become your own central banker. And do not forget, what's the mantra? We need to create security in food, water, energy, security, barterability, which for me is primarily silver, wealth preservation, which for me is primarily gold, and then opportunity positioning, because those opportunities are coming. And it's not because you see these prices spiking. What you really need to do into this fight that we're in and this battle that we're in is you need to hold your purchasing power even. And let me tell you, when there's even fewer of these, do I think we're going to see the 1989 highs in these again? Yes, I do. I think it'll be even beyond that. But you have to remember that it's in terms of this crap. The most important function of gold is to hold its value over time. Hold your purchasing power. That's the single most important function. You want to be in that position so that as these other assets, we're going to see who's going to survive this. This is a big, 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 big deal. This is a total reset financially, economically, and socially. Where do you want to be as we're moving through this reset? That's why the strategy is built in layers, so that wherever we are, we can address that. It's critical, guys. It's critical, and this very well could be showing us that the breakdown in the fiat metals markets is already here, and there ain't no fever like gold fever. We have to come together in community. We have to create that quiet revolution. You vote with your wallets. You vote with your purses. This is my vote in gold and silver in my possession. I trust. And I'll take questions now. Okay, so this is a client question from one of our strategy specialists, Riley. And this is from a client. I have these pre-33 coins, but they haven't gone up in value. Why? Because they're a higher quality. I looked at the portfolio yesterday, and they're a higher quality than, say, like this raw piece, which will definitely be impacted by the move in spot. That's the opportunity, you guys, right? This is moving with the spot market. A little bit higher quality than that is not. Get it before it does, because it will happen. But that's the advantage of these only physical markets. That's where I like to play, because they move first. And then when there's a breakout, letting you know that something is coming. But right now it's the spot markets that's moving, and the lower quality ones. These will move too, and they'll move a whole lot more because they are a whole lot more rare. And Richie, and if, by the way, I didn't answer that well, let me know. This is true for any question. Let me know. It's my job to explain it in a way that you understand it, and it's critically important that you do. So Richie Luxury asks, where do you expect the price of gold to be by the end of the year? You know, talking about the spot price. So to see it at 3,500 would be not a big surprise. We might even get there at the rate it's going, because this, can we show that graph again, please? Okay. So look at this, right? This is a shorter term cup, and we just had a breakout. So my guess would be they can do this to it, right? Push it down, and we do have to fill that gap. However, demand is there. Demand is there. So the spot price I would see go up. Now, if this is indeed the breakdown in the fiat metals markets, will they create a whole bunch to keep most people away? Maybe so, but we could even see 4,000. Are you going to sell your gold into 4,000? I hope not, because that's not even marginally close to its true value. And I guarantee you, I can't tell you when, but I can guarantee you it will go there. And Prepper Patty says, what's with Barclays Bank in the UK? I don't know. I'll have to take a look. Would you make sure I get that? And JP asks, Lynette, what is a fair premium under spot price when selling bullion? Well, we don't, at Zang Enterprises, to my knowledge, because obviously that's not what I do there, but I don't think it's under spot. That's typically what you get is melt if you're taking it to like a smelter, or if you're taking it to like a pawn shop or one of those we buy gold, because they just want it as cheap as possible. But if it's a bullion coin, I'll double check on this, but I don't think it's below spot. I think it's a little bit above spot. I could be wrong. I'll double check and come back and let you know. Make sure that I have that written down, please. Thank you. And King Jehu Khan II, best guess for the price of gold and silver. Well, you know, 35 to 4,000 by the end of this year, but you're still not going to want to sell it. And I think that silver will conclude its cup, so I could see it somewhere around 50. Maybe even higher, because this is a squeeze that's happening right now. This is a very big deal. Demand has exceeded supply. So that's not typically a problem if you're not taking delivery. But there is a whale that's taking delivery. That means that this person, whoever they may be, wants that physical gold in their possession. It's not a trade for them anymore. That's really what it's been treated as, just a trade. Not a trade anymore. This is a big deal. It's a very big deal. We didn't even see this in 2020. Right? What's happening right now, we didn't see in 2020. We saw the premiums, we saw the rush, but we didn't see them taking delivery at the level that they're doing it right now. And Amy Harrell says, I communicated with my cousin in UK, and basically the UK cannot pay their gold contracts. Ta-dam! Thank you so much. My cousin said he wished that he had bought gold and silver. Ta-dam! That is my point. It is no longer in London. And it's really interesting that the Bank of England is shipping gold, central bank gold, government gold to the U.S., and then the U.S. is delivering it out to someone. Can you kind of see the implications of what that is? What happens if the central bank, so we got to pay attention to that, because we've seen a huge rush of countries repatriating their gold. So what happens if they've loaned that gold out and then a country says, we want our gold back? Might be okay if it's just one, but if it's a number of them, it's going to be a big problem. So thank you very much for that. And does that mean that he can't buy gold and silver there now? It's just they can't fulfill the contracts, right? But remember, gold and silver in any form is still monetary at its base. The premiums are a lot bigger on, say, jewelry than they are on, say, the coins. However, make sure you have gold and silver. And Barb Mall says, what will government charge us in taxes when we sell our gold or silver? You see, that's why I've become part of the Sound Money movement, Citizens for Sound Money, on the advisory board, because everything that governments do around sound money is about keeping you away from it. So if you're in the US right now, they're going to charge you 28%. Now, does that mean that you shouldn't buy it? No, that doesn't mean that at all. I'm just telling you, governments will manipulate you to do what they want you to do. And I'm not saying that you buy it right now to liquidate it. That's what the Sound Money movement is about, is getting states to pass legal tender laws, and and it's global as well. But in the US, states to pass legal tender laws, because then we have an opportunity to go to the federal government. You can't start there. You have to start in a grassroots effort. And I need everybody's help. We all need everybody's help, because one person can't do anything, but together we can do anything, right? You see what I'm saying? So right now, taxes are going to be high on it, but I'm not selling mine, so I don't care. And depending upon what you buy, all good citizens should always pay all taxes that are due. But with some of the gold, because there's gold and then there's gold, you get to choose how you handle it. We are not forced to do that for you. And Chris Willis asks, how does demand outstripping supply becoming obvious to the whole world sit in your timeline compared to confiscation? Is confiscation a near possibility? Well, it's already happening in the mines, and you're going to see this next week. I don't know that it is a near possibility. What it is hyperinflation. They want you to go through the hyperinflation. If you're sitting with gold and physical silver, you're not going to be as impacted by that. And desperate governments do desperate things. So I don't know. Timing is the biggest challenge for anybody. I need to get a crystal ball, but I've had some and they never really told me. Let me see. Let's just ask. Here's the magic 8 ball. Okay. Is confiscation a near possibility? Better not tell you now. That's what it says. Look, if you can do it, you're buying these so darn cheap, and this would likely, more than likely, because they can change the laws. But this is how I think it's going to unfold. Let's say spot's at $4,000 when they decide to do an overt confiscation. They want your cooperation. They don't want you to push back. And the easiest access they have to gold, especially in the U.S., is the gold that is held in IRAs. So they would do a big, huge sweep of the gold, and then they would leave you, let's say, $6,000. And most people believing Wall Street, which I don't really understand why they do, however, most people believing Wall Street will say, well, wow, okay, that's not a problem because gold is only worth $4,000 and they gave me $6,000. Right now, it's worth over more than $40,000, but hey, what a deal. And so that's where they're going to go first, to the monetary gold. However, that person that paid $15 million for 1 ounce of gold, they're not going to turn it in for $6,000. Plus, they're likely to be either the ones that write the laws or those that can influence those that write the laws. So I want to be in that same classification, even though I'm not spending nearly that, because you don't need to. What you need to do, And what we do at Zang Enterprises is we establish your goals first. What is it that you are trying to accomplish? And then there's silver, and there's gold and gold. And so then we select the gold that is most likely to support each one, and silver as well, each one of those goals. There are different levels. So we help you define what you're trying to accomplish, and then we put together a portfolio that supports that. And it really is that simple. And you will understand it. You know, I say if something is so complicated that I need some kind of specific advanced degree in order to understand it, if I don't have that specific advanced degree, do you think I can be taken advantage of? Every single time. This is simple. Gold and silver is really, really simple. You hold it, you own it outright. It has the broadest base of demand and the broadest base of functionality. That's it. Simple. And Tony Stilley asks, kind of a crazy question. What will happen to jewelry stores if gold goes to some outrageous amount? Will it be just for higher income individuals and banks? Will silver the new affordable gold? Well, I think silver is kind of the new affordable gold, but it is the secondary currency metal. So a lot of people have built their positions around silver, but it's kind of bulky. And I mean, honestly, you could perform anything with any one of these kinds of gold as long as you can continue to have them. And silver, it's kind of like, I can guarantee you I have hammered a nail in the wall to hang a picture with the heel of my shoe. I've totally done that. And it works. It definitely does. However, if I have a hammer, it happens faster, better, more securely. So it's always the right tool for the job, and that's why you put your goals first. But what will happen to jewelry stores if gold goes to some outrageous amount? You have to understand that you can't necessarily think about tomorrow with today's heads. There'll always be jewelry stores. Now, who can afford that jewelry? Yes, it's just going to be that elite group that can actually afford that. So why not put it in place today while it's still severely undervalued and affordable? Will it be just for higher income individuals and banks? Yeah. I mean, unfortunately, as we go through these resets, globally on average, 80% of the population end up in abject poverty. They're not able to buy the gold and the silver or the jewelry or food or keep a roof over your head. They're in abject poverty. That's why local community is critical, because you have to make security. Food is the biggest issue. Look around you. Are you not seeing all of the people that are going to bed hungry at night? But you need to create that security in food, water, energy, security itself, barterability, wealth preservation. Create that community and in shelter. So you bring to the table what you have. But unfortunately, if you don't do anything as we go through this transition, will you be one that's in abject poverty? Because it's always the middle class that has the greatest shift in standard of living, because they really are so busy trying to put food on the table and sustain a standard of living that they aren't paying attention to what's happening around them, and therefore they're not getting prepared. And let me tell you, I would always rather be 2 weeks, 10 years. I don't care. I would always rather be early than even 1 second too late. And that's why, some people might want to do ratio trading, right? So they're buying the cryptos or they're buying the bullion and they go, okay, when that goes up, then I'm going to convert it into this, or I'm going to convert it into this, or I'm going to convert it into this. Maybe. but I can't guarantee that. I can't guarantee the availability. I could tell you that there were some things that I was able to buy back in 2002, 3, 4 through 2008, etc., that I can't get anymore. Because in physical form, it's a finite amount. And oh, thank you so much, Egg Claire Trio. I have an appointment today. Thank you so much for your support. We really, really, really appreciate it. Welcome. And actually, everybody that's watching this, welcome to the community. I cannot wait to be doing these with a live audience too. That's going to be fabulous. We'll still have you guys on Zoom for those that can't make it, but I'm chomping at the bit to do that because I love doing in-person things. And Deja Vu says, why the $50 difference on palladium between bid versus ask? Well, I don't really track palladium, so I would have to look at that. But if you're looking in the physical markets, if it's physical, there's a finite amount. So, palladium is not a monetary metal. I can't pay attention to everything, but I do appreciate you guys helping me pay attention because, and all the strategy specialists at Zang Enterprises. I mean, there's so much going on. There's so much to see. And Cool Brother G says, if nothing goes up in a straight line, do you expect a dip before it gets to 3,000, perhaps 2,700? Yes, I expect a dip. If you can show that chart again, and let me see if I can blow this up a little bit bigger. I don't think I can do it because I've got it in here. But yeah, it looks like about 2770-ish. So spot would drop down to fill that gap. So yes, but would I wait? Why? You want to get what you want to get. So why wait? I've been buying it consistently since 2002. And that was, spot was at like $2.45. And I remember getting silver dollars for like $4.35. So, and Winter Night asks, hello, Mrs. Zang from Italy. Hi, I love Italy. Here in Europe, we are limited to stacking gold because silver is subject to a 22% VAT tax. Yeah. And that, by the way, started out, I think, at either 2 or 2.5%. They're talking about doing it elsewhere. Once it gets in, then it goes right up. And again, that's about keeping you away from silver. Any suggestion on how to mitigate this factor and still get silver? I'm not sure if that's all silver. It might be, you know what, can you make sure, let me come back to that, Winter Night, and let me do a little bit of conversation. Maybe I'll call my friend Mario and have this conversation with him. That could be a good, would you guys like that? I can call Mario and see what's going, well, he's not in Italy. He's in England. Let me see what I can come up with. But it's just like the tax here on gold. What they're doing is they're taxing money. They use inflation to tax this money that they create. They use it overt, so you don't know, and therefore you continue to accumulate it, work for it, etc. They make it more overt with gold and silver to keep you away from it. I don't let any of that keep me away from it. And I'll tell you why. And think about this for a minute. First of all, laws can be changed, right? So if we've got a groundswell, we can see that change. But also understanding that the true fundamental value at this point is somewhere north of $2,000. What is that 22%, right? It's nothing, especially when you've got spot at like 32 and change an ounce. You see what I'm saying? So this is one of the reasons why it's so critical to understand the true fundamental value of any asset or any instrument, because that's where it's ultimately going, regardless of the manipulations and the shenanigans. So I don't think the 22% VAT tax would stop me from laying in my position in silver. But there could be some other ways around that. I will take a look, and I can get with Natalie and see if he knows anything about it. He's my friend in Tuscany, lives in Tuscany. And Aaron George asks, hey, at Lynette Zang, is the market underestimating the rise in gold because the DXY is so high currently compared to historic DXY? We are well over $3,000 gold. Once the DXY starts reversing, unwind comes. It's all a big game. Right? The traders are in there not really because they think that they want a sound money portfolio. Typically, they're just looking for an uptick, right? And currencies, those are one currency, one fiat against another fiat. And historically, the expectation was for when the DXY, or when currencies rise, gold falls, and vice versa. But as I showed you, and maybe let me just show you that again. Where is it? Where'd it go? Didn't I do that one? I don't remember. I don't see it.
Which one?
Well, it was the one that I showed the difference, or was that in the previous one that we just recorded?
That was in the video.
Okay, so make sure that you see this next video that we just recorded today. It's going out on Thursday, right? Okay, and you'll see the truth even when you look longer term. So yes,
Next Thursday.
next Thursday.
Yeah, because we have the Fed pulled out.
Oh,
That was,
oh, we didn't.
that was
Oh,
Thursday. Correct.
oh,
That was
oh,
Thursday. Yep.
oh. Okay.
Yep, yep. Hey, so I asked a really interesting question, which was so KJ said, someone has gold ever been at fundamental value, and when was that?
Oh, well, yeah, gold does go to its fundamental value. You know what? If you can just bear with me until the live next week on the confiscation, you will be seeing that a number of times. You will be seeing that. Yes. And it does go to its fundamental. It always, all assets, all instruments go to their fundamental value. So I will show you that next week. And
We did this one, right?
Yep.
Just making sure.
And B. Charon, I'm sorry if I'm butchering anybody's name. Is it true that some central banks are buying silver bullion? I don't know, but I'll look. Not that I've heard of, but that doesn't necessarily mean anything. And we certainly know that bullion banks like JP Morgan hold a lot of silver. But I'll take a look at that. And Chris Willis asked, buy gold or pay off a variable mortgage? Do both, okay? The strategy, and you don't have to do them, a lot of times people think it's all or it's nothing. Understand that the sound money strategy that we're executing and with regard to your mortgage, because in a lot of places it is a variable rate mortgage and you only have maybe 2 years or 5 years, and that's going to be a huge problem. But when we go into hyperinflation, that's what the strategy is for. So you could do a bit of both, but based upon the mortgage that you're holding, you want to have enough gold so that when that moment arrives, boom, you can pay it off. We're lucky here in the U.S. because we can get a 30-year fixed mortgage. It's a little bit challenging otherwise. And I kept saying, well, how can I change the strategy to accommodate that? Well, the strategy is based on us going into a hyperinflationary reset because that's where we are in the trend cycle. So it's not a short-term strategy like a lot of the variable rate mortgages are. So I would say do a bit of both, but if you want to know, well, how much gold do I need to pay off this mortgage? You can call us. You can email us at, what's the email?
Questions at?
Oh, thank you. I haven't done that one in a while. Questions at LynetteZang.com. And yep. We'll get you that information because we really want everybody everywhere around the world to be protected. It's critical. And Christine Stevenson asks, Lynette, I love listening to you. Thank you very much. You have taught me so much, made me feel better about converting my IRA to precious metals in 2021. I'm really glad I did. I am very happy for you. Now, the question is, are you continuing to hold it inside of the IRA or have you taken delivery? So I don't know, but I am really glad that you did convert it. Just understand the risk if you're holding it in there. And we'll take a look at that closer next week, too. Media Isville, what are the odds that gold actually drops greatly in value as young people generally have no interest use for it? The odds are none. Absolutely none. Number one, I am seeing a rise in interest from the younger people, which gives me so much hope. And we're seeing this all around the world. And especially when you see entities like Walmart and Costco and Amazon selling gold, and you see people rushing to buy gold, little teeny nuggets in China or South Korea. So, that is an assumption, and it is erroneous, because the younger generation is discovering is that the promise of a better life, if you do this and this and this, then you're going to be able to own a home, educate your kids, blah, blah, blah. They're seeing the lie in it, and they're starting to fight back from that. So it doesn't matter if young people have no interest or use for it. The use is to hold your purchasing power even. That's the single most important thing. But it's used in manufacturing, in aerospace, in outer space, in food, in art, in the financial system, in the medical system, etc., and on and on and on. So most people here in the U.S., I don't know, maybe 2% maybe of the population actually owns gold, and that hasn't stopped it, has it? Because gold is the most important financial asset. So no, it won't. If it drops greatly, it's because they created a whole bunch more contracts. That's how they've suppressed the price, and it's not trading at $40,000 an ounce.
Would just to kind of piggyback off that real quickly, would the mining, if something changed in mining, I remember we just went to VRIC, right? If something changed in the mining process, like they were able to pull it out quicker, is that when we see that kind of devaluation of gold at all? No? Can you explain that a
No,
little bit?
because there's just a finite amount of it, right? So it's all supply and demand. And when you see, who knows more about money and what they're doing to destroy its value than central banks? So why in the world do you think that they are loading up on more gold than they ever have? Because they understand what they're doing. Why would you not do what the smartest guy in the room on any given topic is doing for themselves? Right? Does that make sense? And Wolf asks, I thought Fort Knox supposedly held our gold. If it's not there, where is it? Well, this is a great question. Thank you for bringing that up, Wolf, because just like we see the Bank of England shipping central bank gold to America, that's what's happened with all the gold in Fort Knox or anywhere. They do all of these different leasing and this and that. And oh, God, who knows what the contracts are. So we don't really know if the U.S. has not been audited. And even if it was audited, even if the physical metal is sitting there, it's the ownership of that physical metal that would be in question from all of those convoluted contracts. But where is it? But I could tell you where mine is. I don't care where theirs is. I care where mine is.
Yeah, just real quickly to piggyback off another comment. We talked earlier about like the younger generations not really having the use or whatever for gold. I'm sorry if I'm butchering the name. Shrija Nair said Chinese youth are buying tiny gold nuggets that they can afford. We actually did a video on that.
We did, and that's what I was referring to.
Yep.
So yes, and we're seeing that rise in the younger population buying gold. This gives me so much hope. It really does. I love it. And Randy, and remember too, we really haven't been bitten by that gold fever bug, but there ain't no fever like gold fever. We've seen it happen over and over again. And Randy McCoy asks, how do we know there isn't much more to be found? Well, if you're talking about gold mining, the Department of the Interior, the U.S. Department of the Interior, runs an annual survey on how much in-ground gold and silver there still is. That's public records. So and even if they come across something that they haven't found before, like China recently made a huge gold strike. Well, number one, I don't know yet because I haven't read the report that would reflect that yet. It's not out yet. But number one, how do we know that that's not yet in that 59? Maybe we can show this. Let me just hold on a second. Let me get there. And it's not doing it. Okay. It's not doing anything. So I can't show you there. Okay. So you can do it. Nope, that's not the one. Isn't that interesting? I don't know why it's reflecting that, but that certainly shows you where all the different uses of gold. That's why to that question, well, what if the young people have no use for it? There's just a little snicker snack of all the places that's used. But think about an Olympic-sized swimming pool, right? All the gold that has ever been mined is there, and proven reserves are 59,000 tons left when we've already pulled almost 213 tons out 1,000 tons out of the ground. There is a finite amount. Even if they do another gold find, it doesn't make it unlimited. And as demand grows greater, so do those premiums. And that availability goes away. So how do we know? Well, they're studying that all the time. Empty Space asks, what happens in the paper versus physical market, if anything, when the live gold price exceeds the futures price? So you're talking about backwardation. And this is why I'm saying we're at the beginning of all of this. What are we really witnessing, that breakdown in that artificial relationship that's been created between the physical metals markets and those digital markets? You know what happens? You get an explosion in demand and price. That's what happens. Donna Hill asks, Lynette, thank you. You always have good information. You are very welcome, and I appreciate everybody being here. I really, really do. We've got to grow this. I have inherited my great-grandmother's china, which is lavishly decorated with gold. There's no one to inherit it. Well, I don't know really what to say, but even if I have china that's also decorated in gold, I'm lucky that I do have 2 daughters, but that gold is recoverable. I don't know what to say about that. Maybe there's somebody that you do know and love or that can inherit it.
You also touch on dynastic wealth a lot, right? With
yes.
Those type of things you're passing down, right? So, I mean, there could be a lot of value stored in those items, depending on who made them.
Well, there is. I think she was indicating that she doesn't have somebody to pass it down to. So, I'm a little sorry. Do you use it? I mean, last night we had Brian over for dinner, and I used my china. I love using it. So I use it every opportunity. I don't use it every day, but I use it every opportunity. Aaron George asks, everyone should aim to be their own central bank, even if it takes a few years to build your holdings 100%. 100%. Gold prices going down in Canada and up in U.S. dollars, super bizarro world. But gold is making new highs in pretty much every single currency on the planet in the manipulated spot market. And, you got to wonder about that, because since they can create as much of that stuff as they want to, why aren't we still seeing spot at $435 like it was when I first got into the market? Because these forces are ultimately bigger. ultimately bigger than any Wall Street or any central banker or any government. We just have to be patient. That's what gold and silver require, patience. Just build it. And yes, I agree, become your own central bank, period. And Media Isville at Lynette Zang, how much does it matter which country you buy coins from, i.e. U.S. coins, Australian, South African, Canadian? Well, I'm thinking that what you're really talking about is the new gold coins like the American Eagle or the Australian. So that's all bullion, and that is classified as monetary gold. So from that perspective, no, it doesn't really matter. If what you are is a bullion buyer, then you can get it from any country at all. If you really believe against historic fact that there will not be an I'm not even talking about current facts that they are not confiscating. Well, they are. I've got to tell you, they're doing it right now. I'm going to show you that next week. It is happening, period. So can I have the questions back? Thank you. So yeah, I mean, I don't buy bullion, and therefore I don't do that. Now, in silver, I don't care. So I'm just going to go to, I have Philharmonics, I have Silver Eagles, I have Canadian Maple Leafs. So I have a lot of that in silver because I'm not as concerned by an overt confiscation. Why? Because silver gets used up in production. Gold does not. Gold is recoverable. So that's why I don't. And gold is the primary currency metal. Silver is the secondary. And Chris Willis asks, is that rose gold around your neck? Actually, no, it is not. This isn't even actually gold, but it is really early, and it's garnets. And I always wanted this. And when I found it in New Orleans, I bought it because I'd always wanted a garnet necklace. And Tio Nizzi asks, hi, Lynette, how can we protect with gold? I think you meant Ken. How can we protect with gold and silver against the CBDC and the tokenization of all things? That's exactly the point, because you hold it outside of the system. And then when you need whatever that currency is, then you convert it into that currency and use it. And originally in my strategy, I thought that once we got through the other side of this reset, that there would be a chunk of gold holdings that I would convert into the new currency. But I have totally changed my mind, because when we go into a CBDC, or even if it's not a CBDC, a digital currency that is easy to control and easy to manipulate and easy, what central banks want to do, go to negative rates. It didn't work, but that doesn't mean they're not going to do it again, because they've gotten all of the purchasing power out of the currencies. Now they have to attack principal. So therefore, I will convert it as I need it to buy what it is that I need. That's how you do it. You don't give them everything and give them control. And that's also the point on establishing your goals. What are you trying to accomplish? It could be to replace income. Well, that's kind of more like this kind of gold, right? It might be to put you in a position to convert into an income-producing property. I'm not going to be doing any of that until it's time, and then I'm going to use that kind of gold. So it just kind of depends. You establish your goals, but you don't convert it into the new currency, and don't tokenize it. You can have that option unless we give it all away. But isn't that the point of coming together in global community? We can lay down and let them do any darn thing they want to us, but that's not okay. I'm not concerned about, do I have enough for the rest of my life? Because I do, and I have that food, water, etc., the whole mantra. I'm worried about my grandkids and my great-grandkids and so on down the line. That is our battle. That is our fight. That's why I do what I do. That's why I didn't retire, That's why I don't have any plans to retire, because you guys need me. And so I'm here for you because that's my commitment. And the only guarantee personally that I can give you is that I will show up and I will do the work and I'll do the best that I possibly can. But this is the battle of our lives. We could not be living through more interesting times, but we're all here for a reason. And I think that reason is to come together and grow this community so that we have a voice and we have a say and we take our power back. We have to take our power back. I'm not rolling over and saying, okay, well, it's you, and so therefore you can do anything you want to me. No, 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 no. Keep it private. That's how you do it. Protect yourself. That's how you do it.
We've had a few questions about the sovereign wealth fund. I think we planned on making a video about that. Is that correct?
Definitely.
Okay. Just want to make sure that we address that because there was a few of the questions in here. We will go through that.
So I'll just tell you this real briefly. But yes, I actually pulled that out and put it on my board to work on for next week. But the sovereign wealth funds are really about supporting the market. So I think it's about keeping this game going longer. Now, we'll dig into it a lot more, but look at Japan. They own 90% of the ETF market. I mean, it's about the game. And if they can create more inflation, making these instruments look like they are worth more money when the value, what you can buy with this stuff has gone down, doesn't mean anything. So yeah, the sovereign wealth fund, we're going to be talking about that a lot more next week. We'll look at a whole bunch of them and we'll have that discussion. But I believe that a lot of that is just about keeping the game going.
There's also another person in the comments saying, and I'm sorry I missed the name. It wasn't, I think it's Media is Evil, but I don't think it's him. There was someone in the comments saying that you shouldn't trust that gold is so easy to sell. It's not that liquid. Have you ever had problems with that? Or, there we go. Okay.
No, I have had no problems with that whatsoever. It is the most liquid thing that you can do because it has the broadest market. If this thing were working properly, remember I showed you the 3 markets here, but there's also the physical markets. That's what I'm trying to tell you. Gold is easy to sell because it is used by the broadest base of buyer. It has the broadest base of buyer of any asset. Any asset. So that's your supposition. And now, of course, if you do buy it from Costco, they're not buying it back. So I highly recommend that you work with Zang Enterprises because we will be here for you. I made 100% certain when we set this up, my first question was, if we didn't get that gold or silver from you, can we sell it back through you? And the answer is yes. And we have an exit strategy that, again, addresses the broadest base of buyer. So our job on the way in is to make sure that what you're doing supports your goals. On the way out, our goal is to capture the best gains for you. And it could be through an auction. It could be direct to wholesaler. Could be any number of exits. But that is our job. We can marry things. I mean, we set the system up to capture the most gains on the way out. Understand, this is all about a strategy for the transition that we are already in. So yeah, it's the most liquid thing you can do. It's why it's the safest asset that you can own.
And KJ, I found your question too. Sorry, we had a lot of questions coming at one time, so I missed a couple of them. And I also missed Aaron's question as well. So Aaron, if you can ask that again, I will try to grab that for you and make sure that we answer it for you. But the next question would be this one right here.
Miramar. Mm-hmm. I am still not clear. Thank you for asking me. I'm still not clear how or where to convert to the coin of the realm, whatever that may be. What if it is CBDCs? This is why it is so critical for you to be working with a reputable dealer so that you're always in at the market and you're always out at the market. But you can sell it through many, many wholesalers or many, I mean, there's over 3,000 vendors that would buy your gold and it all depends. If you take it to a smelter, well, you're going to get below spot for it. Where did you buy it? Where did you buy it? You look at what their buyback policy is. And by the way, you should be asking, what's your exit strategy? What's your buyback policy? Because you want to make sure that it's easy for you on the way in, but also on the way out. So you can sell it through a jewelry store. You can sell it through a pawn shop. You can sell it to a smelter. You can sell it to a dealer. You can, I imagine that if they do a confiscation, it will be the bank's job to gather the gold. So you'll more than likely be able to liquidate it through a bank. And then whoever you liquidate it through is going to be using the coin of the realm, wherever that may be. If it's a CBDC, if it's not a CBDC, they're going to liquidate it in that currency and give you that currency. And I hope that answered it. If not, then did it? Okay. If it didn't, then I'll try and figure out again. And don't worry about it, because that's my job. It's not your job to know all this stuff. It's my job and my goal to explain it in a way that you understand it. And everybody learns differently. Everybody does. That's why I try and do it visually as well as auditory. And Gina Young, hi Lynette, how can London do that and not lose in the end? And who will the loser be? Well, London could do that because they write the laws, right? Whoever writes the laws writes the rules. And so they can do, I see things all the time that I go, oh my God, that should be illegal. But it's not, because the people that write those contracts that you and I do not read or do not understand, but who will be the loser in the end? It's going to be the public. It's always the public that is the loser in the end. And that's why it's so critical for you to be your own central banker. And Christopher Perkins asks, in the current market, what GSR is ideal to exchange silver for gold, in your opinion? Well, I have to tell you that they perform different functions for me, so I don't swap them back and forth. I build my positions based on what I'm trying to accomplish. I don't really like to play those kinds of games, the ratio trading and all of that, because we may not have that opportunity, right? Like I said, there are things that I cannot get today that I was able to buy way back when, and I'm grateful that I have it, because I'm not going to be able to get it. So don't play those games. Just determine, how much silver do I need to sustain my current standard of living? I do for 10 years. You do it for however long you're comfortable with. And then I build that position. How much gold do I need to sustain my standard of living and to protect the wealth that I've accumulated? I don't have any in the fiat markets, but most people do. So how much gold do I need to protect what I already have in the fiat markets? How much gold do I need to be in a position to take advantage of the opportunities so that I can then generate wealth and income that I cannot outlive, and I have a legacy to pass down to my children? So you just determine what you need, and then that's what you just build that position. And don't goof around. This is not a time to goof around. It's not a time to hesitate. It's not a time to wait. It's time to get your strategy in place. It's time to build that local community, to create security in all of the areas. And it is absolutely time to build the global community so that we take back our voice and our power. And let's see. Okay, KJ Free asks, will there be buyers of gold at high prices, or will everyone want to sell or hold? Will coin shops end up with too much inventory and not enough cash? No, they will not, right? There are always buyers. You can look at history. There are, not everybody. Remember, I said, globally on average, 80% of the population is in abject poverty. I didn't say 100%. And even in places like Venezuela or Zimbabwe, where 90% of the population is in abject poverty, I didn't say 100%. This is how wealth transfers from the many, from the public, to the few. And then they are in position to own everything. Why not it happen to you? What a concept. How about wealth transfer your way for a change? And if we come together in community on a global basis, we can make that happen. We can demand a more fair system for our children, our grandchildren, our grandchildren's grandchildren, and so on down the line. Let's do that together. And I 100% know that we can. And I'm getting chills. I do. I know this. I absolutely know this. There isn't one doubt in my mind. And you could be looking in the mirror and going, but what can I do? I'm only one person. Said 8.4 billion people. You're right. I can't. What can I do? I'm just one person. But if I can help you, and then you help somebody else, and on and on and on and on and on, now, together, we can make a positive difference that will last, I'd like to say a lifetime, certainly my lifetime, but we've got to do this for our future. We have to. We have to. There is no choice. And I can tell you, I've looked in the mirror and I test everybody. Look at the mirror and say, if not me, who? And if not now, when? There is strength in numbers. And until next we meet, please be safe out there. Bye-bye.